Welcome to another coverage, a product knowledge video. This product knowledge video is for apartment complex owners, and it's quite interesting, and it's a learning experience. It's our speaker today, or the one who's going to be presenting it, is her name is Amanda Daniels. There she is, and she's a business development department leader there for AIC. And AIC is a very well-known organization in this business. So anyhow, she is going to tell us about the apartment complex owner's insurance. Amanda, you've been in this business for a while, haven't you?
I have. I've been working with apartment complexes for about 5 years now.
Oh, brother, you don't know what's going on, and that's why we asked you to be the one to do it. Your part. All right, well, let's talk about it. You have master policies, and I never truthfully heard about a master policy for an apartment complex owner. So what does that mean?
Master policy is a policy where more than one insured is under the same policy. So we have several, depending on the program we have hundreds of different properties on one policy.
I'll be darned.
And that way it brings the price down, lets us do lower deductibles than what you could do on an individual policy.
Oh, I didn't know that. So it covers, here's what it covers in general then.
Yes, we have a property, we have general liability, and we have excess liability. And we have a 45 unit per client minimum. So if they have several small complexes, we can do it, or if they have at least 45 units per complex, we can do it as well.
In the real world, do a lot of people have 45? It seems like a lot when I'm just coming into this and learning. It seems like a lot, but are there many of them that way, I assume?
Well, a typical apartment complex usually has around 100 units in it.
Oh,
if
wow.
there are just duplexes or fourplexes, that's when they're a little too small for us because our deductible starts at $10,000, which for small units like that doesn't really make sense.
Yeah,
so that's why we have that 45 unit minimum.
That's very interesting. I didn't know that. All right, liability. Your move.
So we offer property and liability. Our liability has individual limits, so it's not a shared program like our property is. It has a $2 million aggregate, $1 million per occurrence payout on it. We have hard renewal dates, so we have a 12/14 program. So it starts and begins on 12/14 every year. And we also have a 10/1.
Oh, so all of them? If I come in and it's March, what do I end up being renewed on December? I'm not quite sure I understand that.
Yes, so if you come in on March 1st, you'll pay a prorated portion from March until 12/14. And then at 12/14, it'll renew for an entire year.
Well, you guys must go wild at 12/14 with all these things. I don't envy you. A master policy or partner brokers, that's interesting. What's that?
Well, sometimes locations don't necessarily fit in our policies. So we have partner brokers that we've partnered with that will do some of the things that we can't do. So we have a company that will do umbrellas up to $100 million for us to go on top of our liability.
Wow.
Or we also have property programs that will write properties that we can't necessarily write.
I got you. This is pretty standard in the industry then, and all these kinds of things, right? I mean, to do this. Yeah. Okay.
Yes.
Key characteristics of that master policy. Your move.
All right. So, like I said earlier, it's several individuals with many locations in one policy. So they don't always have the same owner. Well, they don't ever have the same owner. But it's many different owners. We have a policy limit. So depending on the policy that we have 3 property policies right now. There is a maximum paid out per occurrence. So one of ours is $500 million per occurrence.
Wow.
So no matter where you are in the United States, per occurrence, it would pay out $500 million.
Oh, wow.
Now, a lot of people get a little scared about that.
Me too.
But you have to think it would have to be a pretty major storm for it to hit multiple states or even multiple cities on the same occurrence.
Oh,
so we've never come anywhere near that maximum paid out because it never hits very many properties at once.
So you're saying per occurrence. Let's say it's a major flood or something like that. but it'll be localized, or a major tornado, or I guess it's the kind of things you're
Right.
really talking about, aren't you? Those major.
Exactly.
Yeah. And,
right. So it's pretty localized, so it's not going to hit enough locations for it to ever hit that maximum.
I got you. Then broad coverage, what does that mean?
Broad coverage means that we have replacement cost on our policies, agreed amounts. So that means instead of having actual cash value on your apartment complex, to where an inspector would come out in the event of a loss, and he would say, well, your apartment is only worth $1 million, but you have $2 million worth of damage here, so we're only going to give you $1 million. We have a replacement cost. So basically what you insure it for is what we're going to pay you out in the event of a loss.
I see. I'm learning again. Okay. Coverage highlights. Let's talk about the coverages here.
All right. So our carriers are always A or better rated, which most lenders require, which is why we have them. Right. The building and personal property, like I just explained, is replacement cost versus actual cash value. We do have a 110% margin clause, which means if you insure the building value for $1 million, you're going to get paid out 110% in the case of a loss on that. So you get $1.1 million paid out in the event of a loss. So we give you a little cushion there.
Right.
Building ordinance or law, coverage A, and there's also coverage B and C. They're always included in our coverages. That's.
I'm not sure what
those are.
Yeah, what are they?
So the law and ordinance typically is if you live in a historical district and you have to have your apartment replaced, you have to build it back up to code.
I got it. Okay.
So if even a regular complex, if it was built in the 60s but it was damaged this year, they'd have to bring it up to code. And that's what the building ordinance or law covers.
I like it. All right.
Yeah. Our extended period of indemnity is basically what we would pay for loss of income. So if your apartment complex is damaged, one of your buildings can't be rented out until it's fixed, we pay what you would lose in rents for however many months it takes.
Oh, good. Okay.
So the extended period gives you time basically to ramp back up to be for people to move in. So we give you 180 days or 365 days depending on the policy.
Good. All right. Demolition?
Demolition costs and construction, that's also part of law and ordinance, so it is included. So if you have a complex that's damaged and one of the buildings has to be demolished and rebuilt, it's included. So they'll come clear it off and replace it.
Got it. Okay.
Non-owned and hired auto liability.
Yeah, what's that?
$1 million. So if you have cars or golf carts is a big thing for apartment complexes. If you have those on property and you use them in the course of business, it's covered up to $1 million.
Let me do that, and that is, and so if an apartment burns down or something, all the cars in there are covered also? No,
this is just for the cars, golf carts that the apartment complex owns.
Oh, I got it.
And it's the liability of it.
I got
it.
So
it's not the property coverage of it.
Yeah.
Right. So if the golf cart runs into one of the cars on the complex while they're out giving a tour, it would cover that.
Okay. Good. Okay. Now
some complexes have boilers and machinery, boilers for their heaters, that kind of things. It's included in the property coverage if something happens. They typically have a separate limit. On most of them, they're between 10 million and 100 million, which is more than enough to fix a boiler.
I would think.
So.
Better be.
Yeah.
All right. And then real property, is that real property of just the owner or the individuals, or what's that?
Well, since it's for the complex owner, it's just for the owner, but real property includes fences, carports, signs, storage buildings.
Yeah. Good.
Yes. Cabanas and pools. Yes.
Yeah. Well,
so there's not an extra charge for it. It's just included.
Yeah, I can see that's a good coverage too. Well, you know, while we're here, let's ask you for the deductibles. Yeah, tell me about the deductibles.
So our programs, again, it depends on which program we put you in, but our all other AOP, all other property, that deductible is going to be if you have a fire, if you have a car run into the building, which happens quite often in the insurance business
I'm sure
here.
it does, yeah.
That's going to be a $10,000 deductible. The wind, storm, and hail have their own deductibles. So depending on where you are in the country, whether you have high wind hail scores or if you're on the coast, you're going to have a higher wind hail deductible. But we have a $10,000, a $25,000, and a $50,000. So once you send in once we get a submission, that's when we decide what the deductible would be.
Got it.
And then the 2% deductible listed down there is if you're in a coastal location, then that will be a 2% named storm deductible. So if you don't live on a coastal location, that 2% doesn't apply to you at all.
Okay.
Equipment breakdown has a $10,000 deductible. Terrorism has a $10,000 deductible. Liability, none of our liability coverages have any kind of deductibles, which is a big thing to a lot of carriers.
Oh, I can see why it would be, yeah. Well, this is very interesting. I imagine that people who own an apartment complex or partners with it are probably pretty familiar with a lot of these things, but maybe not familiar with all of them. Anybody relatively new in the apartment owning business would like that. Do you have a little bit of advice before we cut off here?
Sure.
Okay.
The best advice is if you need coverage, submit it as early as you possibly can. That way we can submit it to as many markets as we can. We have to get approval on some of our coverages, so give us plenty of time to get the best coverage approved for you. The more details you have about your complex, the better. So if all we're given is just a bunch of data on it and we pull up a picture of it and something looks off to us, we don't know what to do with it. So if there's something odd about your complex or there's a loss on your complex that you need to get some more information about, send it on over to us. It always helps to have more information. And the last bit of advice I have is if you have questions about a shared limit program, please feel free to ask us any questions. We get a lot of people that will get a quote from an agent for our market and they don't understand shared limit programs and they don't really take the time to figure it out, but it is a great option and saves you a lot of money in the end. So.
Good. I got it. I think that's great, Amanda, because I think, obviously we want our people who are listening to this and looking at it to go, of course, to their agent. We connect there automatically, and to go to your agent. The agent, in turn, will come to you as a general agent, wholesaler, SMP, a specialty markets provider. I know you're all of those things, and then you shop it all around the world for them, and they're all around the country at any rate. And that's the way it works, and it does work well. So the advice is really something. Tell it all and tell it soon, right?
Absolutely.
Any other thought? Or is that it?
That's all I have.
Well, that's enough. I think we all learned something. So, Amanda, thank you very much. Rest of you.
Thank you.
Go on, connect with your agency, and then you'll learn even a lot more.